Hello, everybody. Welcome to Monday. The S&P 500 was down almost 0.2% today. Started off really great, up over about 0.5%, and then kind of fell throughout the day. That was true for most of the indexes. There was some excitement, I think, initially about the infrastructure bill, and that's still going on. They did release the text from that last night. 2,702 pages worth of text. And no wonder it takes so long for these things to get through. And it was, they're just trying to map out basically this $1 trillion infrastructure program. It seems to have some bipartisan support. Looks like it has a shot to get passed. Their hope is to get it passed before the end of this month. So we'll see what happens there. The one thing that was really interesting in there was that they're trying to figure out ways to pay for this. And one of the ways is to gather $30 billion worth of taxes from cryptocurrency transactions. And in that, they're trying to get all these exchanges like Coinbase to report all the transactions so that just like if we buy or sell, Amazon or something, that gets reported to the IRS and then we have to account for that. And so we'll see what happens there, but it's creating a little bit of a, tumult in the cryptocurrency exchange arena. So we'll see how that plays out. But the other thing that was interesting today is that the Federal Reserve talked about how they're really not going to be announcing when they're going to cut back on their bond purchases this month. They meet at Jackson Hole every summer at the end of August. And so if they're not going to be reporting, when they're cutting back at the end of August, they said that they are looking forward to seeing what happens in September. So when school gets opened and they want to see a more normal situation in the employment market. Specifically, the unemployment benefits will stop in September. School might reopen in September also. So, and of course, that means that they really won't be talking about it in terms of their definitive decisions on when to do it until their November 3rd meeting. That's somewhat significant because the market's kind of hanging on every word as to when they're going to cut back on these bond purchases. And of course, when they're going to start to raise interest rates at some point in the future. So, we'll have to wait and see how that plays out. We did see the manufacturing report came out today. It was at 59.2. So anything above 50 is considered expansionary. So that's actually a really good report, but it was 60.6 last month. And so they're saying, hey, manufacturing is coming down a little bit. Some of it's supply chain issues, that we've talked about before with semiconductors and all these different types of things. And again, I think that's not a terrible thing. If the inflation is a big threat and the manufacturing comes down some, and it's not super hot, I think that's okay also as far as that goes. And it's still in an expansionary, process as far as that goes. So, and we did see the 10-year treasury drop all the way down to 1.15% today, which is really, considering it was at 1.75% back end of March, early April, a pretty big drop off. That's showing some thought process in the bond market, potentially that inflation, threat might be not as great as we thought it was, at least back in that time, confirmed by these manufacturing numbers and what have you that we've seen too. So I do think we're falling into a nice realm, but we could have a seasonal issue here in August, just in terms of it being soft. But this is a weird August, are we still in a pandemic or are we back to normal? We seem to be kind of in both, depends on who you talk to. So that's going to be interesting to see how that plays out for the market this month. But anyway, that's what happened today. Really look forward to seeing what's going to happen tomorrow. Thank you very much.